So welcome to the webinar. We'll kick things off. Thank you for joining us today. My name is Dominic D'Andrea. I'm a key account consultant here at CreditorWatch, and we also have Paul Mead on the call with us today.
Hi, everyone.
So we're going to do a little bit of an intro about CreditorWatch. Most of you probably know who we are, what we do, but also just give you a quick update. We just released a new BRI, Business Risk Index. So a couple of highlights from that, and then we'll jump into the need to keep customer information up to date, why that's important, how to quickly and conveniently update the customer information. Okay. So first things first, CreditorWatch. So we got CreditorWatch, obviously, we're an asset listed broker. Credit Bureau, we've got around 55,000 customers, 11 million trade lines from ATPs every mile, and 9% of those customers use us uniquely. I think those are some really key factors. 9% of the customers, so there's a lot of unique, really cool data there that we can give you guys in a number of different formats. Obviously, we have an end-to-end kind of credit management solution, starting with the customer insights, just monitoring, reporting, that kind of stuff, onboarding, apply easy, you guys kind of know that. Looking at analytics, Data Logic, a really cool ATP analysis tool, and Collect. But like I said, you guys know us pretty well, so I think one of the really cool things, and I recommend everyone read our latest Business Risk Index. You can either get that from the Business Risk Index site that you can find at CreditorWatch.com to you, or you can find the latest information on our LinkedIn as well. But unfortunately, not good news. I think it's something that we're all pretty much aware and across, but all the kind of bad stuff's up. And it just seems like it's going to get worse. So external administrations are up 35% year on year. Credit inquiries are up huge, 85% year on year. Generally, we're seeing a lot of businesses nervous, looking up their customer bases, or we've got businesses looking for different credit accounts. So they're applying to maybe multiple businesses, and there's a lot of people looking up their credit profiles. B2B payment defaults are up also 31% year on year, and core actions are also up 50% year on year. Bit of a seasonal dip, but they're still quite significantly up. So really important to keep on top of our customer base, making sure that we're trying to mitigate as much risk as possible. And obviously today's webinar is going to kind of help give us a bit of an insight why it's important to know who we're dealing with and what we can do to get better insights. So with that, I'll pass on to Paul, and we're just going to start off with the perils of not staying up to date with your customer. So over to you, Paul.
Thanks, Dom. Look, I'm sure everyone listening don't really need to tell you that there are definitely issues that can arise if you don't stay up to date with a customer's credit, not only their credit information, but also their business details and business information in general. CreditorWatch, it's really a fantastic tool for ensuring that you do stay up to date with your customer's credit file and their credit information. And it's a really good way of being across all of the potential pieces of data that could affect not only your ability to trade with that customer, but also ability to collect on outstanding invoices. Information, just generally, it's just so key when you're dealing with your debtors. And I think also information and keeping up to date with a customer's details and their credit file, putting my PPSR hat on, it can really simply impact your ability to enforce PPS registrations if and when a customer does have an insolvency event. Simplest thing you can look at in terms of the PPSR world is if you've registered against an ABN of a business that has since been cancelled, or you've registered against an ABN of a company, also that registration will be invalid. But also if you've taken a director's guarantee against a director who's actually no longer an office holder of that business, essentially that registration is invalid as well. One of the other big things, if you need to recover assets and don't have a current trading address on file, it can impact the ability, not only the ability, but the time and the costs involved in recovering your property. Looking at it from a recoveries and collections point of view, and staying on top of a customer that's potentially trending downwards in their credit score. If that business credit rating is deteriorating, you do want the ability to easily review a client's payment behaviour, say over the past 12 months, and look at altering their payment terms. So potentially moving from 30 days to 7 days, or even COD as well on those clients. I guess finally, if you've been notified of a change of business structure or ownership, you want to identify who those new directors and beneficial owners are, and also review their credit history, as well as the related directorships or office holdings that they have or have had as well. Updating customer contact information, addresses, etc. And again, based on their credit score and payment behaviour, like I said, reviewing the trading terms that you have in place with them. Jump across.
No, that's awesome, Paul. I was going to say, so basically, when things change, we experience the potential of being exposed to risk, right?
Yeah, absolutely. And I think the thing is, a lot of businesses may rely on their customers to tell them when something's changing, but that's not always the case.
Like if they've got in their factory, they're not calling you to let you know that they have a fire, they're trying to put out themselves, right?
Yeah, exactly. They're not going to tell you that their trading terms or their payment terms are struggling, or they're struggling with payment terms.
Yeah, or a call action or payment default. Or,
Yeah, exactly.
Yeah, exactly. Look, I think we've got one of the things we like to try and do is try and keep these webinars as interactive as possible. So we actually have a poll question that's going to be popping up. Cool, great. So that's up on your screen. So like I said, interactive, please select one of the following. But the question is, how often are you reviewing and keeping your customer list up to date? So please select one of the following: quarterly, twice a year, annually, never, or CreditorWatch does this for me. We'll give everyone a couple of seconds. Okay. So we're good to go to the next slide. We're going to have a look at that results. There we go. So most people were looking at annually, then quarterly, then never. So really, really interesting insights there. Really interesting insights. You know, another thing is, you know, sometimes when, you know, they come to you and they ask for a limit increase or change as well. But yeah, now as things change, as the market, you know, people are going under left, right, and center, you know, trying to stay on top of that's really, really important. Okay, so next, manual versus the CreditorWatch process. Paul, what's this about?
Yeah, so I think it's looking at what businesses are probably doing at the moment versus what CreditorWatch can do in terms of speeding up the process of review and making sure that data that they've got on their customers is as accurate as possible. I think in my experience and historically what we've seen from customers is as a credit controller or financial controller, the process for them in reviewing customers probably looks like they go to the ABN lookup site, check the ABN still registered. They might purchase an ESIC extract to confirm the director information that they've got on file and is still current. And then they'll look through their own ATB and look at the last 6 months of payment behaviour from that customer to confirm that they're actually still paying okay. And if they've slightly dropped off a bit, they may not take any action on it because they don't really have any visibility over what else is happening in the market. Now, in the past, and certainly for some smaller businesses and businesses that are trading with big customers, that process has probably worked quite well. But the thing is, it takes time, and there's no guarantee that the information that you get back is going to be accurate. Mm-hmm. So, CreditorWatch side of things, it provides a perfect, complete snapshot of your customer base and also potentially your suppliers as well. It's the data that you get back It's returned quickly, it's easy to read, and you can get a PDF report as well, which has all of the key findings and breaks down all of the individual data points that you get back. And it's nice, easy to read graphs and pictorial representations of some of the big issues that you might have. And also the thing with the portfolio health check that a lot of customers potentially don't have oversight over is, and Dom, I'm sure you've seen this as an account manager, is you'll speak to customers, they don't capture any ABNs of their customers. So the great thing that a portfolio health check can do is actually do a name and postcode match to determine ABNs on customers. And ABNs are really important because you can see all of that extra information on a business, whether they're simply if they're registered for GST, and all of the related adverse as well that comes with it.
So, looking up an ABN is like looking up a TFN number, for an individual. Obviously, individual stuffs are very different, but just having that ABN or ACN gives you access to so much information. So really, really critical when we're dealing with customers that we have the right details, that we know who we're dealing with, et cetera, et cetera. But in this ongoing kind of, perspective, if we don't have the right information from day one, then when we're doing these reviews and trying to understand what's changed in our customer base, it's very, very hard to do without actually having the right information. So one, if we have the right ABN ACN, we can obviously give you a really great snapshot on that customer. But two, if we don't, we can still try and help you find out those details through this name matching that Paul spoke about too. So really, really interesting.
And I think also what's important to note for our listeners is that the amount of information that we can and type of information that we can return back to you is pretty much limitless with Portfolio Health Check. I mean, I'll go into some of the data sources and results that we can return back to you a little bit later, but the application of the Portfolio Health Check is huge. And it's universal. As I said, you're not just looking at your customers, but also your suppliers. Potentially pick up on both sides of your ledger, which can really affect your day-to-day operation as well. And I think some of the things that it can really help with is just doing that analysis and getting a good snapshot in time of where you are as a trading entity.
Yeah, I mean, when we work with customers, one of the things that we use this tool for is it's a little bit of a planning tool as well. If we don't understand where we're at today in terms of our customer base, how are we going to plan for the future? And now planning for the future is obviously very key. A lot of people are, doing end of financial year, budgets are coming into place. We're trying to either improve working capital and cash flow. Cash is king, but also protect against the downside. So, let's say, for example, we're able to identify that, our customer base has a very large proponent of sole traders as partnerships and trusts, and we know that, they're riskier to deal with. What kind of, risk mitigation tools do we have in place? Are we doing PPSRs? Are we taking out caveats over property? There's a whole bunch of questions, but without doing that initial analysis, it's hard to kind of get visibility in, and it's just, day to day as usual, and then before you know it, things start slipping. So really, really key to get that insight. So great point. Also, the point that Paul made, not just from a accounts receivable perspective, but also from accounts payable and supply chain. Do we know that our suppliers are going to be there tomorrow to provide us with what we need to run our business? Huge question. Huge question. Do we have a backup in place? Do we have a number one, number two, or even number three? So all really important questions that we can start looking at once we have the right data.
Yeah, absolutely.
So we're going to stop here again. We've got our next poll question. We're going to get that up on screen for you. So in terms of, and this is an interesting question, reviewing your customer credit limits and terms. One of the things here when we're looking at this is that, most of the time, and I'm preempting this, so I don't want to actually, give you any kind of ideas, but most of the time we're waiting for the customer to come to us. Is there anything that we can do in these reviews to try and preempt that? So how many times are you looking at, your customers in terms of credit limits and terms? Is it twice a year, annually, when I get a risk alert from CreditorWatch? Oh, sorry, it popped away. We probably got everyone answered it. That was quick. We'll get those up on screen for us as well. So when I get a risk alert or customer requests, cool, great. So those were the two that I was kind of alluding to. That's generally what we see most people doing, but annually is not too far behind, and twice a year. A lot can change in 12 months. A lot can change in 12 months. The business that you gave, you know, a $10,000, $20,000, $50,000 limit and 30 days to pay isn't the same business 2-3 months afterwards, you know. So what we're doing is great to see that a lot of, you know, the people on the webinar, obviously our customers, they're getting those alerts, they're being preemptive, they're trying to reduce their exposure to risk. But if we're not doing that, you know, should we start looking at that or other strategies? Great, so let's go to the next slide here. Do you need a portfolio health check, Paul? Do they?
Well, obviously from a CreditorWatch point of view, I would say every business needs to run a portfolio health check. I think it's one of those tools that is really underrated within CreditorWatch. Obviously, you've got your credit reports and you receive your daily updates and alerts, but it's the portfolio health check is a really good way of getting all of your detail all in one place at one time and being able to narrow down the specific data points and adverse things that you may need to address per customer. As I said before, looking at trading address as one simple thing. If you don't have an up-to-date trading address, that's a big issue. Looking at adverse, seeing if there's court actions on a particular customer. Being able to easily and quickly click through to a credit report for each customer, and being able to tag on some of the additional data points that we've got is also a big one. We've touched on the fact that it helps mitigate your risk across not only debtors but also suppliers. I think one of the other things is that, and we've got it here in the slides, is that it can help to maintain your discretionary limit compliance for your trade credit insurance. So, and that's again across looking at adverse, looking at entity status, seeing that nothing's changed in terms of score over a period of time. Looking at the current directors, shareholders, again, I touched on this, but if you've got a director's guarantee or a personal guarantee against an office holder who's no longer there, your registration's ineffective. And then finally, as we said, being able to break down your best and worst performers in terms of customer base by segment. So you may see that certain locations have undergone a drop in credit score, or conversely, some locations have picked up their credit score based on certain factors. There might be a new development in the area that's increased trading, or there might be a government initiative that started in industry in a location that's meant that there's a lot of trade activity. So all of those things can be picked up quite easily with the portfolio health check as well.
Yeah, beautiful, great, Paul. So it's really about, you know, making sure, you know, just to summarize that, I think, you know, our data is accurate. We know who we're dealing with, and two, we know, you know, what kind of risks they pose. You know, if we're going to summarize, I think those are the two key things: who we're dealing with and what risks do they pose. If we're planning, you know, working. Oh, sorry, was that someone?
No, I think you might have dropped off a bit there, Dom, for a sec.
Oh, sorry, there was some. Yeah, it's really about the risk and data piece. Do we know who we're dealing with, and do we know what risks they pose to us and our business? And if we don't, that's when a portfolio health check is really valuable. You know, we're planning for the next financial year. How are we going to mitigate risk? You know, what are we actually talking? You know, what are we actually going to say to the stakeholders in the business? How are we actually kind of being on the front foot and showing that, you know, we're doing something to make sure that we protect, you know, the cash flow coming in, and we avoid maybe potential future losses. All right, so keeping up to date with the portfolio health check. Give us a little bit about what a portfolio health check is, Paul.
Yeah, so This is where I get down into the nitty-gritty of all the individual data points that a portfolio health check can provide. So bear with me, but I think it's and we've said this multiple times already, but the portfolio health check, it's the best way of keeping up to date with your entire ledger, making sure that your business decisions rather on credit terms and collection activity are accurate, they're up to date, and they're correct. Look, I guess in terms of the portfolio health check, firstly, it's going to validate ABN information for you. It's going to provide you with the status of the ABN, which obviously seems fairly obvious that we'll return that to you. But in the 5 years or 5+ years I've been with CreditorWatch, I've seen countless cases, and Dom, I'm sure you're the same, where entities have been trading with cancelled ABNs and invoicing cancelled ABN, and if anything should happen in terms of an insolvency event, they don't really have a leg to stand on. We'll also validate whether they're registered for GST, which we've touched on, main name, physical address, which again, physical address is quite important. If you've got goods or equipment on site that you need to recover quickly or send a recovery team to pursue, you want to make sure you've got the most up-to-date address for that entity. We'll validate business name, trading name, and importantly, when the record was last updated with the ATO. So CreditorWatch is providing ATO defaults on entities. So again, if you can see that the ATO details haven't been updated for a while, that can be a flag for you as well. So the check also, portfolio health check, it also confirms the entity type. So entity type seems quite straightforward, but again, putting my PBSR hat on, if you're looking at a potential customer or actually reviewing a customer, it can really impact the types of additional information that you need to obtain from that customer when you're onboarding them. So the best example is when you're dealing with a trading trust. You obviously get the ABN of the trust, and you think you can just leave it at that. The best practice when you're dealing with a trust is obviously to go and obtain, at the very least, the signature page of the trust or trust deed, if not the entire trust deed, to get that full visibility over who the trustees are, and then you can conduct some further analysis on the trustees as well. So looking at what other potential office holdings they have. And on the flip side, if you're dealing with sole traders, making sure that you're getting, at the very least, a copy of the driver's license to ensure that you're up to date. So that sort of information you're going to pick up quite easily from a portfolio health check, and it may slip through the cracks when you're just doing your initial investigation when you're onboarding a customer. And then similarly, when you're dealing with an incorporated association, what are the limitations of liability on the members of that association? How does it impact what sort of credit limits you're going to provide to that association as well? We touched on this, but one of the great things with the portfolio health check is that we can provide you with not only the current score of an entity, but also the historical score. So we can look at the last 3 months or the last 12 months of that entity, and it's going to give you a really good snapshot to see how that entity has been trading over that period of time. So if you see potentially an upward trend, if they're improving their credit score, it means that you can potentially look at extending further terms or increasing their monthly limit on spend, which is obviously great for business. Conversely, if they're trending downwards, you can really tidy up some of that or tidy up their credit terms. So maybe, as I said, reduce them down to 7 days or COD as well. And then I think one of the really good parts of the portfolio health check is the adverse flags that we provide on all entities. So regardless of whether it's a sole trader, trust, company, corporate association, partnership, whatever it may be, it's all of the adverse credit information. So adverse ABR or ASIC statuses. Is there a credit-related court judgment or court action that's been lodged against them? Are there payment defaults that have been lodged by other CreditorWatch subscribers, which, as we know with our statistics, a default lodged on a credit file definitely leads to additional adverse behaviour down the road with any entity type. And they're lodged by all other CreditorWatch subscribers. So you can do further investigation, find out if it's a potential competitor of yours that's lodged a default, and are they shopping around to obtain additional credit terms with yourselves. Are there any adverse ASIC documents lodged? So strike-off actions and the like, and published notices as well. And mercantile inquiries. So has another subscriber to CreditorWatch or has another business engaged the services of a collection company because they haven't been able to obtain payment themselves. So all of these flags, and it's a snapshot we provide to you, they're significant flags, and they really will impact your ability to continue trading with the customer, collect on unpaid amounts, and also with your supplier side as well. If you've had a supplier that's been the subject of a court action or has had defaults lodged against them, that will impact your supply chain as well down the track. So they're some of the key points of the portfolio health check. We really can add on almost anything to a portfolio health check in terms of the data you want to get back. We can add on-file ASIC extracts for entities, or if the on-file information we have is out of date, you can purchase new extracts as well for the business. And in addition to the CSV file that you get back, we provide a really good PDF tool or PDF report, which is a great reporting tool for you to provide to either board level or the exec team within the business around some of the key findings of the health check itself. So summarizes entity types and provides a graph on the breakdown of that. All of those ASIC and ABR statuses that we touched on, the summary of adverse and what those adverse are and how that's dispersed across your customer ledger. A summary of the risk scores and how that's actually dispersed across your ledger as well. So whether you're dealing with all A1s or what it may be, or Fs, you'll get that summary as well. How we actually matched your data, so whether we matched against ABN, name match, ASIC, ABR, whatever the matching may be. The breakdown of ledger by entity types. So again, whether you're dealing with mostly sole traders or a lot of trusts, partnerships, companies, and obviously depending on the entity type, there's a certain level of elevated risk or reduced risk. Obviously reduced risk is companies, and perceived elevated risk can be trusts in some cases as well. We'll show a breakdown of the entities you're trading with that are not registered for GST. Obviously, in some cases, there are very valid reasons for not being registered for GST. A summary of the court action, so what the court action is, and again, enables you to go and do more analysis on that. And one of the most powerful things in the Bureau that we have is the payment defaults lodged by other subscribers. So firstly, what entities have it and the number of payment defaults as well across each individual entity as well. So as I said, that PDF tool, it's great to have the data, but that report is great to show to the more senior members of a business how your actual customer ledger is performing, and the supplier ledger as well.
Yeah, I really love the report because it's a great tool that then helps you deep dive into the we provide the data in a CSV Excel file. So being able to look at it and say, well, how many of my customers are sitting at C3 and below? You know, who are my top customers? It's not just bad, it's even good. You know, who are my top customers? Who are the A's and the B1s? You know, who am I looking at that could potentially be a larger business that I could actually, you know, do some business with, you know, use it as a bit of a sales tool or a marketing tool. So that summary in the PDF then allows me to go, all right, let me go into that Excel and filter by X, you know, let me see who all my customers are that are a D and a below, you know, D1, 2, and 3. You know, let me see who all those customers, oh, I didn't realize I had customers I was trading with that have canceled ABNs. Let me go there, and then you have actionable lists that you can actually use in the business. Okay, cool. These are the guys that we need to give them a call. They've got to cancel the ABN. Obviously, something's changed. It could be simple as, because they're paying their invoices, it could be as simple as they changed their business details and they haven't told us. But then we have a credit agreements or director guarantees which are no longer effective. We need to cover that hole just in case something goes bad, you know? Look, these are all of our top customers with really good credit scores and credit ratings and no adverse against them. You know, let me give this to the sales team. Hey guys, these are our top customers. Have we explored? Is there any additional opportunity there to generate some more revenue for the business? You know, these are all the questions that we can ask ourselves. You know, we do a bit of analysis with that PDF, and then we can do a deep dive into the CSV and actually pull the data and use it. So it's a really, really powerful tool that we use with customers all the time. Really, really great. So I think, Paul, and, you know, interesting to get your opinion on this too, but with a portfolio health check, you know, I would normally recommend running this at least once a year, but even more than that, you know, biannually too. It just really depends on life cycle of your customer. What's your kind of thoughts on that, Paul?
Yeah, I'd completely agree. I think it depends on firstly the volatility of your ledger and how many customers are in there. So someone that's potentially in the FMCG or construction space might look to run it more frequently, just the nature of those industries and the quick turnover of some of those entities as well. So I think in that case you might look at it as a quarterly process as well. Some more stable industries you may run it biannually or annually, just on top of the information you're getting from our risk alerts. Just because I think, as I said, it gives you that great snapshot. And another thing to consider is how often you need to report on your ledger to your exec team, or potentially if you're a multinational reporting overseas on the health of your ledger and ability to collect. So I think they're all things to consider when you're looking at how often and to what scale as well, and what information you want to get back.
Yeah, 100%. Great point. Great point. Okay, so before we let you go, we do have one last poll. If you would like one of the team to get in contact with you, just let us know. Happy to give you a little bit more information on the portfolio health check if you have any questions or anything in general. Feel free to hit yes there, and someone from the team, whether it's your account manager or one of the team here, will reach out to you. Awesome. Beautiful. Well, thanks, guys. Really, it's really great being able to talk to all of you today. I hope that you found the session useful. Paul, thank you for joining the webinar and giving us your great insights and your expert knowledge. But obviously, as you know, CreditorWatch is here for anything that we can help with. So please feel free to reach out anytime, and we hope you enjoy the rest of your day.
Thanks, Tom. Thanks for the chat.
All right. Thanks, guys. Take care.